Welcome back to my series, Demystifying the Real Estate Offer. How is this series still going on? The offer just has so many things that can blow up in it. That's why we're still here. And today, we're going to talk about the appraisal. If you're purchasing with cash, congratulations. You don't need to watch this video because you're probably not going to have an appraisal as part of your property. But for those of you who are getting a mortgage, tune in because you are going to need an appraisal. When you get a mortgage on your house, your lender will order an appraisal and it's going to cost you somewhere around $400 to $500. And that is going to be due either immediately when you order it or at closing. The appraiser is going to meet the listing agent or get access to the property. And that person's job is basically to come in, confirm what they see in the listing, the number of bedrooms, number of bathrooms, the renovation level, the improvements that have been done in the house. They're going to be doing a measurement of the home to confirm the square footage. And they're going to go home, compile their appraisal report, and that is going to have a value for the house. That value, the appraised value, is what the bank is going to be willing to lend to you on. Explosion number one, you offered more than the appraised value of the house. Let's say you offered $500,000 on a house and it appraised for $480,000. Now what? Well, step one is take a look at the appraisal report and see if there are any errors in it. Review that with your agent and with your lender, because if there are errors, you can send it back for correction. All right, so let's say there's nothing wrong with the appraisal report. You have a few different options if you have an appraisal contingency. First thing you could do is you could go to the seller and say, I need you to drop the price to $480,000. And they could say, sure. You could say, let's meet in the middle. And they say, that would be great. Or they could say, you can go stuff it because you offered $500,000. I agreed to $500,000 and that's what you're going to pay me. All right, so explosion number two is the seller told you to stuff it and you don't have $20,000. So in this first scenario, the seller has said, no, we're not going to decrease the price. It's still $500,000. And that means that the bank is only lending on $480,000 and you need to give the extra $20,000 in cash at closing. So if you have the extra $20,000 in cash and you want to use it, perfect. Pay the money, be done with it. But if you say, I don't want to pay for that, the house appraised for $480,000 and that's all I want to pay and not a penny more, well then go ahead and void that contract and find the next house. Another option is decrease the amount of your down payment so that you have the extra $20,000 in cash. That means that your mortgage payment is going to go up because you're putting less down. So depending on how you would originally configure your loan, this may or may not be an option for you. If you have a conventional loan and your contract falls apart because of a low appraisal, you're not going to be in default. And if you have an FHA loan, you already have a built-in appraisal contingency as part of your financing contingency. In our competitive market, a lot of buyers in competitive situations will waive their appraisal contingency so that they can be more successful in winning out in a multiple offer situation. And if you have the cash to make up the difference, then you're in a strong position. Unfortunately, it's just a reality of a hot market like ours. And typically in hot markets, you'll see that the appraised value can lag behind the market value of a house because an appraiser has to use their sold comps as their basis, whereas the market and buyers can say, I know realistically I need to spend more than that in order to get this house. So sometimes in a hot market where prices are rising, the appraisal will lag behind a little bit. This is a quick introduction to the appraisal. I hope you found it helpful. Tune in for the next video, which is going to be financing falling apart. So if you're not already, please subscribe so that you can be notified when my new video is posted.